what we have right now is you can see the excitement and you can hear the excitement in the newsroom because the Reliance numbers have come out. But what I have with me right now are numbers only for Reliance Jio, right? Q1 cannot be 612 crores. This is the PAT for Reliance Jio. So RIL has released numbers, and the first number which has hit exchange is that Reliance Jio has reported a profit of 612 crores for the quarter gone by. You should not jump to any kind of a conclusion. We'll have to understand, what has been the criteria for coming out with this number, because Jio again has a complicated way in which they calculate their profits and they sum up the entire subscription base, how many new additions, how many of them are making money. But what we have right now is the Reliance Jio ARPU, and Ajay, 134. I remember reading a note in the morning which said that the ARPU was supposed to be at 125. So it is definitely 10 rupees higher than the general consensus estimate.
Kitna hai subscriber base? How much? Right, 215 million is the subscriber base for Reliance Jio. Earlier, the Reliance Jio number has come in, and the main number would be following in. But Mrityunjay is here with us from KPMG on telecom. So let's start the discussion on Reliance with telecom itself. Mrityunjay, now though I'm not wanting a reaction on Reliance Industries Jio's performance as such, but Jio has got a 215 million subscriber and the tariffs are still very competitive. How are you looking at the competitive landscape right now, purely for the telecom business, for all the three key players put together right now? Mrityunjay, this question was for you. How are you looking at the competitive landscape where Jio is operating right now in?
So can you hear me?
I can hear you. Go ahead.
Yeah. So the real competition is around data right now, and I think the operators who are giving the most relevant plans and experience on data, I think that's where the real competitiveness in the market is. Of course, all of this also goes with the fact that how the new NDCP gets implemented for all of the operators going forward, specifically with the targets around growth, specific targets on broadband achievability for all of the subscribers. So I think that's really the marketplace. It's also important to have clarity on some of the issues that the sector has been raising, specifically in terms of debt that the players hold, some of the players, and of course the future of 5G and how the spectrum auctions will eventually pan out to be.
Stay with us, rest of the numbers. Nikunj, in fact, 9,500 crore. Nikunj, what your reaction is about on the net profit front? Other numbers have started coming in exactly in line with numbers. Top line is slightly on the higher side at 1.4 lakh crore.
See, Ajay, Reliance is the behemoth now. So to assume that, we will be able to get a exact top line, estimate, it's difficult for anybody. But in generally, I guess for me, the Reliance Jio EBITDA margins have expanded. The pain point 2 years ago for Reliance Jio, for Reliance Industries now has become a big opportunity. We know that GRMs in general would have been under pressure. For the quarter gone by, rupee was volatile. For the quarter gone by, crude prices were volatile. So has the petrochemical demand really managed to arrest the decline which their GRMs would have reported? I guess that is the point we need to look at. So Devin Choksi, good evening. 9485. I have the consolidated PAT with me. I'm waiting for the detailed breakup. But what is your first take? I'll come to you for another detailed take, but first take, and how would you conclude Reliance numbers based on the consolidated PAT number, which is north of 9,400 crore?
Yeah. Hi Nikunj, good evening. Well, I think on the face of it, the numbers look, I think, quite good. The EBITDA at 20,661 crores is against expected numbers of around 18,800 crores as far as I think the analyst consolidated poll is concerned. I think so from that perspective, if you look at it, I think the EBITDA has come good. The net profit has been slightly lower compared to the expectation, but I guess I think we'll have to wait for the details for it. Maybe one of the reasons could be that we all estimated the ARPU at 137, and I guess I think the ARPU has come down to 134. That could be the reason in the Jio segment, and that may be I think the impact of I think slight amount of net profit adjustment. But otherwise, I think on the face of it, first cut reaction, I think the numbers are good. Yes, I think I get this particular detail. Oil and gas EBIT loss has come up at 447 crores, and I think that could have possibly the impact at lower levels. That could be, but I think I will probably wait for more details to come out. But on the face of it, numbers are good, I would say. I think more or less in line expectations.
Yeah, right. Let's also get you Vikas Halan's view coming in from Singapore. Vikas, thank you very much. Really appreciate your patience. You waited for this for almost 45 minutes. The gross refining margin at $10.5 has been reported by Reliance. If not the specific on the company, but tell us how much softness did you observe in refining as a sector? Even Singapore GRM was slightly on the lower side. What are your thoughts?
Yeah, look, the Singapore GRMs were soft in this quarter, particularly if you exclude May, which was a bit of an aberration. Both April and June were a bit soft across the board, actually, on fuel oil and distillates and everything. On a quarter-on-quarter basis, it was about $1 softer, and I think that has basically translated into Reliance's GRM as well, which is $1 lower, or approximately $1 lower than last quarter. So we have seen the oil prices going up, and what tends to happen is demand softens across the region, and there is softness. Plus, Q2 tends to be a little bit softer. Q3 is when a lot of refineries, Q2 calendar that means, and Q3 calendar year and Q4 tends to be better for refineries. So I would think this is probably the bottom in terms of refining margins are concerned, unless oil prices are in for another shock, which we don't expect. And I think oil prices will stay where they are, and they will probably moderate a bit. And then you will have refining margins benefiting from some refinery shutdowns in Q3, and then in Q4 there's a general sort of uptrend in terms of demand, which also supports margins. So the second quarter of the calendar tends to be a bit softer in any case.
Sudeep Bandopadhyay also joins us, and we also have Sudeep Anand. Good evening to both the Sudeeps. And Sudeep Anand, the petrochemical business, if I do a sequential comparison and again a year-on-year comparison, has done well, and there is a marked bump up in the retail vertical. But why do you think the petrochemical business for Reliance, Sudeep Anand, has done so well?
So petrochemical, if you see, most of the projects is already up and running, and petro gasification has also started. So that is actually, I think, has started playing its role, and we have seen a significant jump in your petrochemical EBIT. And overall, if you look at the your polymers and polyester margin in last quarter was also pretty strong. So there is a definite very good beat on petrochemical margins. So our EBIT was 69 billion rupees, while they have delivered roughly about 79 billion rupees, which is way ahead of our expectation. So result, if you look at the operationally, EBITDA is much ahead of our expectation of 187 billion, while your net profit is almost in line with our expectation.
Right. Sudeep Bandopadhyay is also here with us. Sudeep, what is your view on the way refining EBIT has fallen to 5.5%? They have clocked 6 quarter plus. So quarter on quarter, we are looking at quite a big softness coming in, both in GRMs and EBIT contribution from refining. Do you expect this softness to continue in the medium term on the refining side, Sudeep?
Well, I think, normally the first quarter is a little softer quarter as far as GRM and the refining margins are concerned. So I'm not too surprised with the reduction in the GRM. Yes, of course, if you plot it on a chart and you see the GRM is coming down quarter on quarter, and it normally should have been a cause of concern. But I think, considering the way the refineries shut down for maintenance in the second quarter of the year and the fourth quarter of the year, I think the second quarter, that is the current quarter where we are in, the refining margin should improve. Also remember that Reliance has the capacity to refine all kind of crude, and that puts it in a different league altogether vis-a-vis the other refiners. and that's why they normally enjoy a better refining margin and better GRM compared to most other players in the industry. So I'm not too worried. But yes, of course, the refining margin and GRM has come down, and that obviously is the cause for probably a slight bit of reduction in the PAT compared to where the market was expecting. However, overall other businesses have performed well. Petchem obviously has done very well, and it was expected. So I think that's how we get the results the way it has come.
Right, that's correct. Petchem is very well, 2% higher margins this time. The entire number is actually led by Petchem, but the ARPU on Jio has also fallen to 134. Mrityunjay, what kind of trends are you seeing from the challenger in the telecom sector, which is taking a hit on ARPUs, but subscriber number is going higher and new offerings are not ending anytime soon, compared to how incumbents are trying to react to this?
So I think the ARPUs going down in voice I think it's plateaued out. If at all, at some point we will see some level of movement up. As far as data goes, there is still a lot of competition that is happening in the data space. But I think more importantly than just the ARPUs, I think it's time now. How do you monetize the entire pipe or the data that's now with the significant population in India, and that monetization is driving various strategies going forward, be it in terms of media integration or looking at IoT or looking at alternate ways of providing solutions, or even looking at the enterprise business, which is a very, very important space to look at for growth going forward.
Sudeep Anand, now Reliance had three basic verticals: the petrochemical vertical, the refining vertical, and then also the E&P vertical. The E&P vertical is not firing, the refining vertical seems to be slowing down, and then you have the petrochemical vertical, which is only growing right now. So for the old traditional businesses of Reliance, do you think there are suddenly two engines which are shut right now?
No, I think on a refinery side, it's a cyclical business, and last quarter your refining margins were slightly on a lower side. But we have seen that this has started picking up, and probably over the next 3 to 6 months, probably we'll see that your refining margin will come back to, for say Singapore will come back to around $7 to $8. As a result, your Reliance is likely to report by around $11 to $12 per barrel. So I think refinery business we cannot rule it out, and once your petrogasification will start playing at full swing, probably we'll see that significant, and at current price of your petcoke and your LNG prices, probably the GRM expansion would be more than your $2 to $2.5 per barrel. So that will also drive your growth. So refining and petrochemicals, both the business are likely to do very good over the next 2 to 3 years at least.
Can I ask you a question? Okay, Deven, the re-rating in Reliance has come after the AGM. And the re-rating has happened after the AGM because Reliance indicated to the world that, look, we want to be a modern tech company. We want to build Reliance based on the data, artificial intelligence, and use our subscriber base to churn more creative data. Now, these numbers will not show any evidence of what Reliance is trying to attempt. And the reason why stock went up by 10% post AGM is because markets are very mighty excited about Reliance's new age or big data or the new artificial intelligence plans. So do you think analyzing these numbers may not be a good idea, because the way Reliance stock has moved, it is based on futuristic promise and futuristic projections?
So Nikunj, I think analyzing these numbers, I think we can extrapolate these numbers to a little better level. We are currently seeing in case of Jio, the revenue coming only from the mobile telephony segment. Now fiber to home means that you will have landline segment, you have ISP segment along with, and probably I think you would see the higher amount of revenue contribution coming from that area. So generally I think one sees that I think you are having on one side the ISP segment, one side I think landline you have, and you have the set-top boxes. If you combine all these things together, chances are that the ARPU probably will expand faster than what we are right now seeing. Current ARPU of 134, 135 I think has a potential to go up to 400 to 500 per month, and down an exponential growth in the customer segment, which is happening because of the fiber to home connectivity that is coming up. I would think that has created a visibility for about 1 lakh crore worth of EBITDA for the company going forward, and that is what has excited the market, and that's where I think probably the stock price has gone up. Though I think this particular number would take time, because I think implementation of fiber to home would take time, but I believe that I think 2 years hence, I think this is one possibility which is emerging, and that's where I believe that I think the stock has re-rated and it will re-rate further, in my opinion.
Mayuresh Joshi is also joining us from Angel. Mayuresh, you may have seen the numbers by now, so I won't take your reaction on the number, but with this kind of performance, now Reliance is trading at 14x 1 year forward. Last couple of years it has traded at 12 and a half. It is already at a premium. How much scope is there for the stock to outperform or move up higher in the medium term, looking at the run up today on a 15-day basis? Since AGM2 it has been on an upswing. Do you think that with this kind of performance kind of getting in the price in the medium term?
Good evening. I think from a valuation perspective, yes, I think you might argue that from an immediate near-term perspective, the probability of valuations being on higher side in terms of mean and median averages is probably there for Reliance. But I think you look at all the three different verticals that they're probably running at this point of time. I think the petchem business has shown tremendous growth, and there is every possibility that the petchem deltas, both in terms of volume growth that can actually come through, and again the expectations in terms of margins holding up can be true for Reliance. Ever since the refining of gas cracker should probably start working in their favor as well. On the refining side, again, I think it's been a very reasonable and a healthy show with GRMs at 10.5%, and it was more or less in line with expectations. But Reliance is a very complex refiner. So in that sense, again, I think the kind of outperformance over Singapore GRMs to the tune of $4.5 a barrel still holds true. So in that part of the business, I think it should probably start holding up. What has surprised me rather at this point of time has been the Jio numbers. And as Devin was mentioning, I think the kind of expectations that one can actually lay out in terms of the broadband services, though I think that would be back-ended over the next 3 to 4 quarters in terms of an absolute showing. I think the ARPUs, specifically in terms of both broadband, in terms of the digital TV kind of services that they can offer through Jio Fiber, I think can be far higher. So on the subscriber base that we are talking about and the potential size, both in terms of the household broadband services and the entire business, enterprise business, you're probably looking at healthy trends year and a half down the line. So the consolidated numbers with a large part of their capex behind, with minimal operating expenses required for all three sub-segments of their business going forward, should have a very healthy showing in terms of return ratios. To do that bit, I think the valuations probably get justified, and the earnings trajectory probably can go at a much faster clip for all these three sub-segments.
Right. Vikas, I'll let you have the last word on Jio. As one of our panelists, Mr. Deven Choksi, was saying that over the longer term, don't be surprised if 300, 400 rupees ARPUs can be reached. Do you see that once the industry consolidates on tariffs and other stuff, competitive intensity will come down and ARPUs will start heading higher? What are your thoughts?
Oh, definitely ARPUs will head higher once the industry stabilizes. This is not a sustainable ARPU for a data network. But the point about getting to 400, I take that for, when you look at just the Giga Fiber business, where the target number of homes is just about 50 million. Now, when you look at mobile business, there you can't get to 300, 400. India is not a market where you get 300, 400 per month as an ARPU. That hasn't happened and unlikely to happen over the targeted time period. ARPUs will increase, but let's not forget there is going to be 5G expenses also very soon. Reliance will want to stay ahead, and there will be capex for that part of upgrade. Also, fiber to home, there is going to be significant capex. So the overall mobile business or digital business will continue to drag down some of the free cash flow, in our view, but it will provide earning upside once the market stabilizes. How much upside, we have to see, but 300 to 400 per subscriber is going to be pretty tough to achieve on the overall basis.
Sudeep Bandyopadhyay, I go back to that point again. On Monday morning, do you think these numbers are unlikely to move the needle for Reliance stock? Because Reliance now, Reliance had moved up after the AGM, and these numbers don't give a reason for analysts to come out and upgrade their estimates. And if Reliance does not move aggressively, what do you think it means for the markets? So two parts. How do you see Reliance moving on Monday morning, post numbers? And B, if Reliance does not move, what impact it could have on the markets?
Well, Nikunj, I agree with you. I think these numbers are pretty good, but they are not something which will kind of enthuse the analysts to kind of further upgrade Reliance from the current levels. So probably we will not see any extraordinary movement in Reliance stock on Monday morning. But having said that, I will also reiterate that the numbers are not at all bad. They are pretty much in line with market expectation. Also remember, market expectation on Reliance is pretty elevated considering the valuation at which it is quoting currently. So yes, it will be kind of status quo as far as Reliance is concerned, no future upgrades, but there definitely will not be any downgrades. There will be optimism on the Jio business going forward. There will be optimism on GRM recovering in Q2 and further. There will be optimism on the Petchem business. Also retail, we are not talking because not too many numbers are shared. Maybe there will be some amount of optimism pertaining to the retail business doing much better going forward. So there is a bit of optimism built in the share price, and that will continue. There may not be a further upgrade. As far as the overall market is concerned, I think we will continue to have a positive bias. I'm not sure which stock will move and how the markets will move on Monday morning. Probably we need to see how the US market kind of shapes up today. But by and large, the positive bias will be there.
Devin, just last word from you. What kind of reaction do you think the street would, give a reception to this kind of a number, given that we already ended the session at days high with Reliance and there is some good price performance since the AGM?
Ajay, as I review the numbers on a segmental basis, I find that I think the star performer definitely is Petchem segment. I think where the margins have improved very smartly. Refining holds the potential to improve the margin, and because of the feedstock change happening and maybe a September quarter, I think should see first reflection. That is what I take. The retail business has seen a smart jump also in the margin, and probably I think that's one of the key takeaway, which is silent at this point of time, but key takeaway. And the geo potential remains on a higher side, as I have explained. So I think all in all put together, my take is that I think though market may have run up ahead of result, it may have some kind of a cooling effect on Monday or maybe next week. I am not too sure on the trading side, but I feel that I think any correction of some degree, I would think that the buying would emerge in this particular counter, and that's where the long-term investment would take place, I think, in the counter during the correction. So I would be comfortable buying the stock when it corrects at a lower level.
In fact, gentlemen, all of you, thank you so much for accommodating our late evening request on Friday to analyze all important Reliance Industries quarterly numbers. It was a very healthy show from Reliance this quarter, but on expected lines. The stock already ended at sessions high on Friday. Going into the numbers, take that into account when you prepare for trade on Monday with this kind of performance in hand. But now to take away the fact of firing on all cylinders continues, and justifiably the stock is at record high. Thank you very much for watching this special telecast on analyzing Reliance's first quarter numbers.